Right. Morning, everyone. Welcome back to our morning cuppa at 8. So looking at the market yesterday, I can see that the um Hong Kong market continue to move higher. But if you look at the US market, there was a pullback yesterday night, and so look at the heat map yesterday, right? You do see that the 992, which is a Lenovo, have together with the Meituan 3690, have lead the market sentiment, right? Despite that, the crude oil have actually went up just yesterday after the news saying that the Houthis have attacked two commercial tanker, right? That belongs to Saudi Arabia, right? And so. Uh, Apart from the at the Hong Kong market, right, on the during the Monday, right, we did have a technical report on this aluminium of China, which is 2600. You can see that in the as the oil price move higher, right, market is looking at the US Iran war team, right, the this 2600 has went higher, right? The Chinese name is called Liew, right? And it's heading towards 880 and followed by 930 Hong Kong dollar, right? So another aluminium counter in Malaysia, so that would be a press metal. So in Hong Kong market, it will be a 2600 or China Hongqiao, right? And now in the tech stocks, we do see that Lenovo have continued to move higher yesterday. In fact, it have surpassed this red color line, showing that the momentum now remain strong, right? Eyeing to test the 25 and followed by 27 Hong Kong dollar, right? And so as for the oil price, you can see that the oil price have surpassed $85 per barrel. I think this morning it have closed somewhere at 92 US dollar, heading towards the 100 and followed by 110. Right, so on the downside, I think support will be somewhere at $75 dollar per barrel at this juncture. So in tandem with the weakness in the equities market, we also see that the COMEX gold have a corrections yesterday, right? So far, we remain a bullish buyers on the crude oil and then a bearish buyers on the gold. Meanwhile, looking at the US market, there was a corrections yesterday, right? And this week, the big tech company has been giving out their quarter two results, and after the quarter two results, I can see that quite a lot of big tech company have breached their support level, showing that corrections is in play on the tech companies so far. Right, and market right now shift the attentions towards the defense related counter. We can see that one of the counter that their stock code is RTX, where RTX have break past the 208 resistance. So RTX is one of the counter that we have mentioned on our Monday reports. And so yesterday results, after the results are published, market reacted positively. There was a gap up on the RTX. And apart from RTX, you also see that the Lockheed Martin LMT also went up, right? And not to forget, last week, Donald Trump has unveiled additional investments in the defense sector at Pennsylvania in the US. I think this week, together with the uh, increased escalations in the Middle East, right? The market have seen a very strong demand on the defense related counter. So apart from the defense counter, you can actually look at the oils counter, which last week we did mention Valero Energy, right? The Occidental Petroleum OXY, right? This morning I do see that ExxonMobil have actually also, and together with Chevron, shares have moving up in tandem with the crude oil price as well. Okay, so I think two sectors are moving in the US right now, the defense as well as the oil and gas counters. Right, as for Malaysia market, FKLI remains sideways, and we still keep a bullish bias on FKI with stop loss at 1680. Now, as for the FCPO, right, moving in tandem with the crude oil price as well. We have breached the 4,007 resistance. So the latest price actions have confirmed that bulls are in control right now. So we have closed out our short positions and we shift over to long positions on the FCPO, and we have our downside support at 4530. So on the upside, FCPO likely to travel towards 4,009 and followed by 5,001, right? And so now, Malaysia market, you can see that most of the stock are consolidating yesterday, right? We do have a few counters that have a positive return yesterday, showing that sentiment is strong. Firstly, we do have the this Heng Yuan, which are crossed above the 1 ringgit and 60 cents, moving towards 1 ringgit 75 and 1 ringgit 90, right? Heng Yuan is a very high beta stocks. So you can see that once the oil price are moving up, right, the market is actually looking at the Heng Yuan, and I do see that downside support is 1 ringgit and 50 cents. So apart from Heng Yuan, you can also look at PChem, Petras Chemical, where the research have a buy call right now. In the tech space, Nation Gate have remains very resilient so far, keeping a position above 1 ringgit and 15 cents. So I think on the downside, this Nation Gate will be consolidating between 1 ringgit 15 and 1 ringgit. Right, on the upside, it should move towards 1 ringgit 25 cents and followed by 1 ringgit and 35 cents. Now, if you're looking for some smaller counters, another counter that caught my attention would be MFlex. So I think that today, right, MFlex may have another positive day, right? Downside, it should be at 11 cent and a half and followed by 10 cents. That would be the downside support for MFlex. As for the trading stock this morning, we'll be looking at the big cap counters, which we do have a buy call by research right now. So in terms of technical, right, Gamuda have a stage breakout, right, moving above 4 ringgit and 30 cents. So next hour will be 4 ringgit 45 and followed by 4 ringgit and 60 cents. Downside support is 4 ringgit 15. Then we have the CTOS Digital, we break past the 68 cents on the back of high volume. So after a breakout, CTOS will be testing 71 cents followed by 74 cents. Downside support will be at 65 cents. So we have two breakout stocks, Gamuda and followed by CTOS Digital. So I'll stop here and pass the stage to Max. Thank you.
All right, thanks, Joseph. So we have just initiated coverage on Gas Malaysia Berhad with a buy call as well as a target price of 6 ringgit and 50 cents. This presents about 29% upside as well as a 5% yield. There are three key reasons that we like Gas Malaysia. Number one, they are a beneficiary of higher crude oil prices, given that their shipper division essentially earns a fixed margin on MRP, which is the gas prices that tracks Brent crude oil. Given that Brent oil price has already spiked in second quarter due to the Middle East conflict, and also in the recent weeks, we also see Brent oil has also increased. We are essentially forecasting about 26% increase in MRP in 4th Q, given there is a 5-month lag between from MRP to Brent oil price. Hence, we do, but overall, we expect a MRP to increase about 28% next year. This is to reflect the 21% increase in our Brent oil price forecast for 2026. Number two, we also like Gas Malaysia because they are looking to build the next RGT4 or regasification terminal in Yan Kedah with target commissioning in 2030. Do note that these RGTs are essential for the government in order to procure enough gas to supply to the new gas plants that is needed to meet the new energy demand by 2030. We believe RGT4 will be a key supply to Malakoff, given that Malakoff is looking to build 2 plants with total 2.8 gigawatts of capacity, and also that Malakoff and Gas Malaysia do share a common shareholder in MMC Corp as well as Site Mortar. Assuming that the Gas Malaysia spends about 21 billion ringgit capex on the project and a 70% stake. We have imputed a 49% per share valuation from the project into our SOP. We see further upside given that there is a potential for Gas Malaysia to even allocate some of the capacity for their own shipping division, which presents another 10% upside to our target price. The third factor is that recently the government has also approved the tariffs for the RP3, which is the regulatory period starting from 2026 until 2028. They essentially receive a 20% tariff hike for this 3-year period, and this should provide a stable earnings growth for their regulated business, which makes up about 40% of their group profits. Overall, we estimate that there will be an increase of about 25% in capex approval for these 3 years. We shall see their asset base grow to about 2.7 billion by end of 2028. So all in, we are forecasting a 4% earnings growth this year, but 16% next year, mainly due to the higher crude oil price resulting in higher MRP. Our target price implies 18 times PE, which has +1 standard deviation, but we think it's fair given that of the stable regulated earnings, as well as the upside from GT4, as well as the MRP figures as well. Do note that Gas Malaysia also provides a stable 5% dividend yield, and we see the recent share price weakness for Gas Malaysia as a good opportunity to accumulate, especially we expect earnings to improve to reflect the higher MRP and Brent oil price from fourth quarter onwards. So within our sector, again, our topic will be Tenaga. We also like YTL Power, but Gas Malaysia will likely be the third in our pecking order. So with that, I will now pass on to my colleague John for the next presentation.
Thank you, Max. Let me continue with result review not on Westport. So Westport announced their second quarter results yesterday. First half earnings was up 53% year-on-year to 700 million, above our and consensus estimate at 56 to 59%, despite reflecting the full impact of the Middle East conflict on the higher fuel costs and a lower transshipment cargo from the Middle East region. So the positive earnings surprise was mainly driven by a higher than expected port tariff at 240 per container, as compared to our initial tariff assumption of 210. Looking ahead, we expect the value-added services charges to normalize in the second half, but this will be more than enough offset by the strong volume growth in the coming quarters. I'll talk about the container volume. First half container was down 1% year-on-year at 5.5 million TEUs. The pullback was mainly driven by a weaker transshipment volumes from the Middle East region. Within the volume within expectations, as we expect a seasonally stronger second half. During the analyst briefing, management guided for a strong volume turnaround in the month of July, with throughput growth of 7 to 8%. And the yard density remains healthy at 80% in the month of July, with 2 new container yards expected to contribute an additional 500,000 TEUs capacity per annum. And also the Westport 2 expansions remains on track, with the first 300-meter wharf at CT10 to commence operation by third quarter 2028. All in, we maintain our throughput growth forecast of 4.5%, within management's unchanged guidance of 0 to 5%. Meanwhile, we believe the fuel cost remains manageable, despite shooting up 39% year-on-year in the first half, as it still remains below 23% of the total OPEX, which is the highest level we observed due to the Russia-Ukraine war. All in, we raised our next 3 years earnings forecast by 7%, after raising our tariff assumption from 210 to 220. We keep a buy call with a new target price of 20 cents, and we remain constructive on the stock despite the recent share price rally riding on the encouraging macro data, which is the first half GDP growth of 5.6%, as we expect a seasonally stronger second half. At this level, Westport is trading at a forward PE of 16 times, which is about +1 standard deviation from their market average. That's all from my side. Let me pass the floor to the next speaker. Thank you.
Thank you, John. Hi, morning, everyone. This is Vanessa from the Warrant team. So let me just share with you a little bit about what do you need to do. Means that you have the mistakes that you actually have to avoid when you are a new warrant investors or maybe existing warrant investors. Okay, yeah, so there's a few mistakes that you normally have to avoid when invest in warrants, right? So I actually use Gamuda as an example because for Gamuda, we actually have 4 Gamuda call warrants that's issued by RHB Warrant. All right, so all these Gamuda warrants are issued at different time, different dates, and also at different exercise price, different exercise ratio, and that actually cause different specifications and also how all these warrants react to the market situation. All right, so this is a snapshot from yesterday from the RHB Warrant website. You'll be able to see all these Gamuda call warrants and also the price of these warrants, the bid price, and also the price change yesterday. So the price change that's on our website is different from what you see on TradeSmart. Okay, that's the first thing that you need to know because we normally use for all warrants calculation on the website, right? We actually use the previous closing price for the bid price, and then we just calculate, and then we just compare to the current spot price, current warrant price, and then you'll be able to see the price change. Okay, so it's not from the morning, huh? Yeah, so the first thing first that you need to know is that not all cheapest warrants always the best. All right, so cheapest warrants means that if you look at the bid price or when you choose a Gamuda warrant on RHB TradeSmart, then you go and choose the cheapest one. And if I compare, that will be 1 cent. 1 cent is very cheap. Say, oh, I want to buy the 1 cent warrant. But you need to actually look at the sensitivity of the warrant. Because normally cheap warrants, right, it will actually come with not very good sensitivity, which means it will be less responsive compared to slightly expensive warrants. I mean, expensive as in the absolute price is higher, right? So you see this 1 cent and this 3 cents, right? The sensitivity would be 9 ticks and 13 ticks. So this is C4V and C4I. So even though it's very cheap, but then the sensitivity is not that good. But it actually caters to your needs. Like if you are looking for something that is cheaper, so you can, because you have very limited capital outlay, then you can actually look for it if you have a very bullish view. On the other hand, if you are you don't actually have that much of patience, you are going to trade in, for short term only, then you can actually look at Gamuda C4S with a sensitivity of 2 ticks only, or C4O with a sensitivity of 5 ticks. All right, so it's actually very hard for you to imagine how many ticks and how many ticks, and I will show you later how do you actually use it. Right, so yep, this is number 1. So not all cheapest warrants are always the best. Number 2, the highest gearing means you will get highest profit. This is actually not true. All right, so if we look at it, oh sorry, I highlighted wrongly. The effective gearing highest would be 15.9 times, which is Gamuda C4I. So effective gearing means it's like a multiplier of all these warrants. So imagine 1% move in Gamuda, it will actually bring 15.9% potentially gain in Gamuda C4I. So if you buy this and then, if Gamuda move up 1%, then you will actually make 15%. Sounds very good. Okay, but you need to remember one thing is that all these leverage effect or gearing, they are a double-edged sword. So if you want to make that much of money, then you do have to make sure that your risk profile allows you to lose that much of money as well. So it will actually go both ways, right? So if you want to manage your risk and also reward, then you actually have to look at effective gearing with not too high. I would say about 4, 5, or 6 times would actually be quite decent for you if you are monitoring it actively. All right, so in this case, Gamuda C4I will not be a very good choice for you, even though the effective gearing is at 15 times. Okay, and then you see the price change. The price change actually, it did not actually happen yesterday. Yesterday actually all these 3 actually make profit, but not Gamuda C4I. So this most likely is due to the sensitivity. It's not very good. Okay, and the third one would be ignoring the exercise price of warrants. So this is a little bit complicated if you are still new in investing warrants. Yeah, exercise price means that the price that we have already structured in to all these warrants. right? So normally we will compare it to the current share price. So if the current share price is higher than the exercise price, like this Gamuda C4S, right? Yesterday closing was 4.30 ringgit, and the exercise price was 3 ringgit and is 3 ringgit and 68 cents, then it's actually in the money. So I highlighted it 15% in the money. And well, out of the money means the balik, then you will see the share price is actually lower than the exercise price. Means exercise price, you have to wait for the share price to move more upwards in order to hit the exercise price. That's Gamuda C4V, and is about 23% out of the money. A little tip for you, if you are looking to trade Gamuda today, or maybe on Monday after listening to Joseph, right? You can actually consider Gamuda C4O or Gamuda C4S. All right, it depends on what's your strategy. If you have enough capital outlay and you want to have a scalping trade, so forth, Gamuda C4S will be good for you because the sensitivity is only 2 ticks. While if you want to invest with medium size of capital, like 7.5 cents for 1 warrant, then Gamuda C4O will be the best. So it's really up to your decision. All right. So how do you normally use it? How do you normally invest in it? All right. So we have to come to the common mistakes that you might make. Number 4, that is not using the price metrics and simply guessing. Okay. We don't guess in all warrants investment. We do not have to guess because the issuers already get the price metrics ready for you on the website, right? So RHB warrant, we definitely have these RHB warrant price metrics on the website. So you just need to choose what warrants that you want to invest, and you just put it in and you compare. So if you compare and what is the current price and what is the price that you want to take profit, your TP, normally you actually use the technical chart of the mother share to make a decision, and then only you will use a price metrics to see what is the price of all these Gamuda call warrants. So I have mentioned Gamuda C4S will be good for you if you want to have a very short-term trade and you don't mind getting 1 warrant which is priced at around 20 cents. So you see sensitivity of 2.5 ticks, right? Which means either 2 ticks or 3 ticks, means 1 or 2 steps in Gamuda, and then you will see the warrant to move by 1 tick. Yeah, and then percentage gain from 20.5 cents to 21 cents is actually much higher than 4 ringgit 35 cents to 4 ringgit 36 cents. And this is why everyone said warrant can give you a very leverage effect return. All right, so that's all from me today. If you have any questions, feel free to call us at this number. And thank you so much for dialing in. We'll see you on Monday, same time, RHB Morning Cup at 8. Thank you very much.